Good morning, ladies and gentlemen. I'm Pawan Kalyan. Today we're going to talk about types of loans. The term loan is popularly used to denote the granting of an advance in lump sum, usually based on some acceptable securities. Under the loan system, credit is given for a definite purpose and for a predetermined period. Traditionally, loans were provided for working capital funds for business operations, but banks have extended their lending activities to invest in long-term bonds and open-end securities, both government and private. Furthermore, loans are advanced not just for financing trade and industry, but also to government units as well as to consumers for a range of personal products like housing, automobiles, education, etc. There are mainly five types of loans: short term loans, long term loans, bridge loans, composite loans, consumption loans. First, we're going to talk about short term loan. Short term loans are loans which are granted for a year, not exceeding 1 year. These are advanced to meet the working capital requirements. Again, security of movable assets like goods, commodities, shares, debentures, etc. They are usually taken to meet the working capital requirements of the business. Long term loans. Medium and long term loans are usually called as term loans. These loans are extended for periods ranging from 1 year to about 8 years or 10 years on the security of existing industrial assets or the assets purchased with the loan. Term loans are used for purchase of capital assets, for establishment of new industrial units, for expansion, modernization, or diversification. They involve an element of risk as they are intended to be repaid out of the future profits over a period of years. Bridge loans. Bridge loans are essentially short term loans that are granted pending distributions of sanctioned term loans. These help borrowers to meet their urgent and critical needs during the period when formalities of availing of the term loans sanctioned are being fulfilled. They are repaid out of the amount of such loans or from the funds raised in the capital market if these loans are granted by financial institutions. Composite loans. If a loan is taken for buying capital assets as well as for meeting working capital requirements, it is called a composite loan. Usually, such loans are availed by small entrepreneurs, artisans, and farmers. Consumption loan. Traditionally, banks used to focus on loans for productive purposes, but during the recent past, banks have increasingly started giving loans for consumption purposes like education, medical needs, and automobiles, etc. Thank you.